A new trend has been making waves in the investing world: weekly dividend ETFs. Instead of waiting months for a dividend check, these funds are designed to provide income on a weekly basis. And right now, two names are standing out in this space: WPAY from Roundhill and ULTY from YieldMax. The idea of consistent weekly income is appealing to so many investors, especially those who want their portfolio to feel more like a steady paycheck. Instead of budgeting around long gaps between dividend dates, these ETFs aim to smooth out the process, giving investors more frequent cash flow. But with both WPAY and ULTY promising something similar, the big question is, how do they compare, and which one is better suited for different types of investors? Let's start with the basics. WPAY is Roundhill's entry into the weekly dividend ETF game. Roundhill is a company that's known for launching unique, innovative ETFs that capture big themes, and WPAY is no different. It's positioned as a fund designed to deliver steady weekly income by using a rules-based strategy that focuses on high-quality, income-generating assets. The whole idea behind WPAY is to take a familiar dividend investing approach, but supercharge it into a weekly structure. Investors get consistency, predictability, and the psychological benefit of not having to wait long stretches between payouts. On the other side, we've got ULTY from YieldMax, which is well known for its income-focused ETF that use option strategies to deliver high levels of cash flow. ULTY is their flagship ultra income fund, and it's built differently from WPAY. Instead of just focusing on traditional dividend-paying companies, ULTY uses option strategies layered onto a portfolio of U.S. securities. What that means is that it's not just collecting dividends from stocks. It's also generating income through the premiums it collects from writing covered calls and other option techniques. For income-focused investors, that can mean higher, more frequent payouts, but it also introduces some unique trade-offs. So when you put WPAY and ULTY side by side, you can see that they're both playing in the same space, but they're taking very different paths to get there. WPAY feels like the more classic approach. It's the weekly version of dividend investing that a lot of people already understand. ULTI, meanwhile, is more aggressive. It's designed for investors who want maximum income potential, even if it means giving up some upside growth or exposing themselves to more volatility. Now let's talk about why these two funds have captured so much attention so quickly. The main reason is that weekly dividends are a game changer in how people think about investing. It's a psychological boost that can make investing feel more rewarding and tangible. And in a world where financial independence and passive income are buzzwords, the timing of these ETFs couldn't be better. But, of course, every ETF has its trade-offs. With ULTY, one of the things that people always talk about is NAV erosion. Because the fund generates income by selling options, the payouts can sometimes eat into the long-term growth potential. That doesn't mean it's bad, it just means investors need to understand what they're signing up for. ULTY is about cash flow today, not necessarily about long-term capital appreciation. For some people, that's exactly what they want. For others, it might not be the right fit. WPAY, on the other hand, takes a slightly different approach, and that's where its strength lies. It's aiming to balance the appeal of weekly dividends with a portfolio that feels more sustainable over time. It doesn't promise sky-high income, but it's built to deliver consistency. That makes WPAY attractive for investors who want the benefits of weekly payouts without the same level of concern over NAV erosion. In other words, WPAY may feel a little safer to some investors, while ULTY may feel more aggressive and income-heavy. One of the most interesting things about this whole space is how quickly it's evolving. Just a couple of years ago, nobody was talking about weekly dividend ETFs. Now, it feels like every conversation about income investing eventually circles back to them. So, which one is better, WPAY or ULTY? Honestly, that depends entirely on your personal goals. If you're someone who wants maximum cash flow right now and you're comfortable with the trade-offs that come with option-based strategies, ULTY is probably the more exciting choice. It's bold, it's income-focused, and it's built for investors who prioritize yield above everything else. If, on the other hand, you prefer a more balanced, steady approach, WPAY could be the better fit. It may not deliver the same headline-grabbing yields, but it's structured in a way that might feel more sustainable over the long haul. What makes this conversation even more exciting is that investors don't actually have to choose just one. Some people may decide to pair WPAY and ULTY together in the same portfolio, balancing the aggressiveness of ULTY with the steadiness of WPAY. That combination could create a unique income strategy that feels both rewarding and relatively balanced. It's all about what makes the most sense for your risk tolerance, your goals, and how you personally like to manage your money. At the end of the day, both WPAY and ULTY represent a shift in how people think about dividends and income investing. They're part of a bigger movement toward making investing feel more immediate and rewarding. Whether you lean toward the boldness of ULTY or the balance of WPAY, what's clear is that weekly dividend ETFs aren't just a passing trend. They're likely here to stay. And for investors looking to build cash flow, that's something worth paying attention to. And if you found this video helpful, make sure to hit that like button, subscribe to Money Stick Unfiltered, and turn on notifications so you don't miss the next breakdown. We're going to keep looking at these high-yield ETFs, the risks, the rewards, and whether they really live up to the hype. See you in the next one.